Hello, traders. Today is Sunday, June 22nd. This is my full top-down analysis for the US dollar yen. So anyways, on the monthly time frame, US dollar yen, I think that we're in an ABC correction. I mean, we have what I would say is like a perfect five waves up. Then we have impulsive down, likely a wave A. I think this is a wave B, and I think this push down is a wave C. Most wave Cs do turn at the 100% area of wave A. So the 100% Fibonacci extension of wave A projected out the top of wave B, which we definitely didn't quite get to that zone. And our last big impulsive down is right here. So I think this move up potentially is still going to end up being a correction. And I still think we're going to get at least one more leg down when the market is ready, at least. Going down to the weekly time frame, I mean, we definitely got one big spike up. And then we have a higher low. There's probably a pretty good chance that this move up right here is like the wave C of an ABC correction. So this is like an ABC, maybe go back up to the 78% and then make its way down to that 100% Fibonacci extension target from the monthly time frame. So going down to the daily, now I have this marked as an ABC because it just looks like potentially five ways down and then an ABC. It kind of almost looks like it's like this is the A here, and then this is now still a wave B, which would have to go down one more time to make one, two, three waves of B, and then go up for the big wave C, like I showed on the weekly, and then continue the higher time frame downtrend. That's why I had this labeled as an ABC because it looks to me like we're actually still in a wave B. Like this is an A, B, C of wave B. So, anyways, keeping that in mind because it's extremely important no matter what time frame you're trading on. Going down to the 4 hour time frame, I would definitely be watching my Fibonacci retracement levels. The 61 and the 78, I think, would be the most likely areas. We should know when this move is over because we'll get a breaker structure to the downside at a Fibonacci level, which we obviously do not have yet. So, as of now, the trend is definitely still up. Going down to the 1 hour time frame, we do have to pay very close attention to the 61%. If price goes down at this level and gives us a break of structure, then that definitely is going to turn me into a seller, telling me that the ABC correction is over. I will for sure at that point start looking for sells at the end of pullbacks after the break of structure. But it doesn't have to break structure at this 61%. It could potentially go up to that 78% that I showed on the daily and the 4 hour time frame, which if I squish down you can see it way up here. So if it doesn't break structure, then there's no reason for me to go short. Even if it does start to go down, I can kind of assume that this move down potentially is just a pullback to this move up, unless it breaks structure. So if I do see a move down, I would assume it's a potentially a correction, and it could go all the way up to the 78% and then give us a break of structure. I have no idea whether it's going to be the 61 or the 78%. I just know that when the market does make that break a structure at a Fibonacci level, that's what's going to tell me that the wave C is over, and that's what's going to tell me that it is time to start looking for shorts again. So, anyways, don't forget to like, subscribe. Don't forget to check out my free Discord group, link down here in the corner, and also take a look at my website, fxpipcollector.com. As always, thank you for watching and happy trading.